So
the timing
therefore,
was a little
the
off.
song "Don't Stop Believing" really would apply to this one, and I kind of still believe. Some of this is, it's a sign of a good investor is they let their winners run and they don't let their losers run. And in fact, this is one that arguably I've let run too far. I have an average price. I'm in jail on this one, probably somewhere south of $20. But the turnaround is very impressive for a company where expectations were so low. Gross margin close to 40%. Hey, Barbie is back. North of 10% in terms of sales growth. Hot Wheels is back. So, I think the worst of the story for Mattel in terms of the bankruptcy of Toys R Us, et cetera, is behind it.
A lot of Wynn's problems are self-induced, as we've talked about for now. Contessa Brewer's done a great job on the Wynn story. Stock went from 200 to 100, basically in a straight line over the previous 6 months. But here we are now, 125. Now, you would think, and I'm going to play the game correctly, given my views on the market, I would say fade it, but you would be wrong. I am going to say trade it. Pull the graphic, please. Ding, ding, ding.
Nice.
You say, well, what are you, nuts? And yes is the short answer to that question. And Macau gaming revenue down 5% year over year last month. I get it. A lot of bad numbers. But valuation is pretty interesting. The stock is bouncing. And I think if you have any hint of a trade deal over the next couple of weeks, you'll see a continued rally in this name. So although I'm somewhat pessimistic broadly, I think the market in Wynn can at least continue to go higher.
If you look at the chart on this one, it's correlated to.
You're like Mikey here.
We'll get there. We're going to get there. There's a couple of more names left.
All right.
It's correlated to oil. I think that they've already had their run. We're in an oversupplied state. I would be fading the entire space.
Some people will point to this, it's had a big bounce. We just talked about how that big bounce isn't necessarily so big. People point to the debt here, not understanding really the way the company works. It is very asset heavy, right? But if you look at the multiple, if you look at the cash flow here, it is so easily sustainable for that debt. In fact, they always have the problem, what do we do with all the cash? They buy back stock, they do acquisitions, they become bigger and bigger. And we talked in the last quarter about a secular shift of the idea of the sharing economy for big equipment. They're the master of that.